Everything is so good that it's scary. It seems like a new bull market has begun, but I feel a little worried. Politicians continue to haggle over the government debt ceiling, either reassuring the market with public statements that they have almost reached the target or, on the contrary, that the problem is far from being resolved.
Macroeconomic indicators have calmed down a bit. The number of weekly jobless claims was lower than expected, to 129,000 applications against the expected 145,000. The second estimate of GDP will show that the U.S. economy grew by 1.3% in the first quarter, which is higher than the initial estimate of 1.1%. Thus, the theory of a soft landing is still alive, although the Index of Leading Economic Indicators, LEI, portends the possibility of a recession over the next 12 months.
The minutes of the Fed meeting showed that the opinions of monetary policy makers were divided. Half of them are convinced that they need to raise the rate further, convinced that the economy will withstand, while others believe that they need to take a breath before they cause even more disaster. At the same time, the market continues to believe that we will see even one rate cut by the end of the year.
The hero of the week was undoubtedly nvidia, which after announcing its quarterly results, became the sixth largest company in the world with a capitalization of almost $1 trillion. Overnight, the company's value increased by $200 billion, reminiscent of the year 2000, when the prices of Intel, Cisco, and Sun Microsystems soared and investors were ready to pay any price. The situation is repeating itself, and the market's behavior can hardly be justified or explained in terms of common sense. But what good is common sense when emotions take center stage?
Now imagine what emotions Katie Wood, probably the most famous investor in technology companies, is experiencing when she looks at the current price of nvidia at $380 and recalls how she sold the company's shares at the end of last year when the price was between $160 and $170. So trust your money to visionaries after that.
What is the result? The news seems to be good, but it's disturbing. Obviously, nvidia's results and the hype around AI, which given the market prices, has already turned into mania, have diverted attention from debt problems, still high inflation and possible Fed actions that will continue to slow down the economy. But for how long? It's hard to call the situation normal when the S&P 500 is floating on the surface thanks to 8 mega companies that are actively manipulating the term AI, while the S&P 492 is starting to sink.
And finally, we would like to remind you that the information you have just listened to is not an investment advisory. Remember, investments in the stock market are always tied up with financial risks. So be careful and cautious. Like and subscribe to our YouTube channel. See you soon.